So central banks and teenagers have one thing in common. They both say one thing and then do the other. At least with central banks, we eventually get a press release. Before you place your next trade, watch this. Good day, traders. Francois here, your market analyst here at ATFX Africa. And welcome to today's daily market brief, where we've got three big movers for you on the radar. Kicking things off with GBP USD, gold, and the FTSE 100. Expect fundamentals, technicals, and maybe even some witty one-liners or two. Let's kick things off with the pound. The British pound slipped below 1.36 following the Bank of England's latest policy decision. The bank voted 7-2 to keep interest rates steady at 4%. But what stood out was the two members who actually pushed for cuts. This highlights just how divided the Bank of England remains on its path forward. Adding to the complexity, the bank showed its quantitative tightening program reducing annual growth sales from 100 billion pounds to 70 billion pounds with a focus on shorter term bonds. This signals caution as policymakers attempt to balance fragile growth with inflation that remains nearly double their 2% target. Across the Atlantic, the US Federal Reserve delivered a 25 basis point rate cut on Wednesday. But Chair Jerome Powell described it as a risk management move, not a shift into aggressive easing. That reminder has capped sterling's potential upside, and ongoing dollar strength remains, well, a significant headwind. Looking at the chart, this pair is trading near 1.354. Immediate resistance sits at 1.357. A break above could open the door to that 1.366 level, with a downside push that may bring the 1.35 handle and that 50-day EMA back into focus. The pair remains caught between bullish ambition and bearish caution, a tug of war with no clear winner yet.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Moving over to gold, which is pausing, but still strong. Prices are holding near that 3,650 level, having stalled a 2-day pullback from record highs. Fed's cautious tone has given the metal some breathing room, but dollar strength continues to cap further gains. Geopolitical risk also remains a key driver. Renewed caution in both Eastern Europe and the Middle East are keeping safe haven demands alive. For traders, this means gold continues to serve as a hedge when global headlines grow unpredictable. Looking at the charts, support is firm around that 3,630 level, and bulls have defended it effectively. Should that level break, further downside could expose 3,580, with a deeper move opening the path to 3,500 and potentially even 3,440. On the upside, immediate resistance is at 3,670, with that 3,700 mark and the all-time high just above it acting as the immediate test. Right now, gold is pacing itself like a long-distance runner, steady, measured, keeping its eye on the bigger target. Let's finish things off today with equities. The FTSE 100 edged higher to 9,228 points, reflecting broader optimism in the global market. A stronger US dollar lends support to multinationals, while benefits from overseas earnings, though not all sectors joined the rally. Retailers next dropped almost 4%, despite reporting solid earnings and even raising its dividends. Markets were unimpressed by its company's cautious guidance. A reminder that in today's environment, investors aren't just chasing profits, but also signs of confidence and momentum. On the global stage, the Fed's rate cut steadied Wall Street while US tech optimism spilled into global indices. Notably, Intel shares surged after Nvidia announced a $5 billion investment in the company. This buoyed sentiment in the US tech is filtering across into Europe, supporting indices such as the FTSE. Having a look at the charts, the FTSE is hovering close to its all-time high of 9,358 from August. Resistance currently sits near 9,290, while support is found at 9,200. A break could bring a fresh test of that record peak. But if momentum fades, a pullback towards 9,100 would be a healthy consolidation. So, with markets closed tomorrow, it's the perfect time to step back. Review your charts and get ready for what could be another volatile week ahead. Remember, the calm of the weekend doesn't last long. Once Wall Street opens its doors, all chaos can break loose. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description below and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.